The function that gold plays fundamentally for an investor is it saves them from the depreciation of the purchasing power of their savings. Buffett does that through genius. The rest of us do it with insurance. Gold for 2,000 years has functioned as a store of value and a medium of exchange during periods of time when social circumstances or political circumstances reduced the value of people's savings. Remember that if you like an asset, the fact that it's cheaper is a good thing, not a bad thing. People who feel trauma about declining gold prices or gold stock prices are people who don't actually believe in the asset and might not want to be in the space at all. Second thing is, you'll recall in our last interview, I said to you that from my point of view, at least, the junior gold stock market was way, way, way ahead of itself. It collapsed in its own weight. The buyers were narrative driven, not mathematically driven. And the sector itself did so many private placements, so many issuances, that they smothered demand with a flow of new issues. But more importantly, with regards to gold itself, while gold trades around many different factors, the most important are interest rates, real and nominal interest rates. The period of the increase in gold price from the third quarter of 2019 until 3 months ago coincided with a decline in the interest yield on the US 10-year Treasury from 200 basis points to 60 basis points. Coincided very nicely. The plateauing of the gold price and its subsequent decline coincided with the increase in the interest rate on the US 10-year Treasury from 60 basis points to 150 basis points. I would suggest to you, Jake, that for most people, the most important determinant, near-term determinant of the gold price is the US 10-year Treasury interest yield. Looking forward, you know me for a while now, I'm pretty unconcerned about a month or a quarter. I tend to make my money in 3 or 4 or 5 year chunks. Looking forward, I think that this gold bull market is very much intact. The Barron's Gold Mining Index that I refer to so frequently on your show is a wonderful tool to understand that. In terms of duration and dimension, gold bull markets are very frequently 10-year affairs, not 2-year affairs or 3 years affairs. And by way of dimension, the gold equity, well, the gold price, as an example, in the last gold bull market, 2000 to 2011, went from $253 an ounce to $1,900 an ounce. When people say to me, Rick, the gold price has moved from 1,100 to 1,700, is it over? I have to say, if you're a student of history, it's hardly likely that it's over. During those 10-year bull markets, during a cyclical bull market, cyclical declines in the index of 25 or 30% are commonplace. Cyclical declines of 10% occur with the frequency with which you and I inhale and exhale. People who don't realize that are people who aren't going to make money. If you believe in the arithmetic around gold, if you believe that quantitative easing, debt and deficits, and artificially low interest rates are going to depreciate the value of your savings, then you believe in gold. And if you believe in gold, you will be easily able to withstand the volatility that we see in a secular bull market. And you will come to regard 25% declines in the equity indexes as opportunities to fill in your portfolios with stocks that you wanted to own that were too expensive when you discovered them. I'm absolutely delighted with the circumstance that I see in front of me. I have an absolute belief that there is an overwhelming probability that over 2 years or 3 years, the gold market and hence the silver market and hence the gold and silver equities markets aren't merely higher than they are today, but rather are much higher today. And the fact that the markets are giving me a sale, that goods that I want to buy are on sale, that goods that I want to buy are markedly cheaper than they were 3 months ago, is lovely. It's truly a benefit. I believe that all markets are manipulated in the near term. I don't believe that there's been a decade-long conspiracy to reduce the gold price or reduce the silver price, although I believe that governments talk it down all the time. because expressed faith in gold and silver is the same as expressed lack of faith in government, which hurts government's, self-image.
Uh-huh.
But markets are manipulated all the time. The idea that somebody would sell a very large amount of silver at midnight when there was nobody else in the market says that they're not trying to maximize the return on the silver that they sold, rather that they're using the price action in the physical market to spoof the paper market, which is on a daily basis. Did you know, Jake, many days, the futures market trades 200 times the available of silver for good delivery. I'm not talking about on a weekly basis or a monthly basis. I'm talking about on a daily basis. So the ability to send price signals to the futures market, which is extraordinarily leveraged from the physicals market, is huge. And the market gets manipulated a lot. But the manipulators manipulate in whichever direction is easiest. When I came into the market in the 70s, the manipulators were there in force, and they were manipulating the market higher. The spoofs that they were doing were the other way around. When interest rates were declining, and hence of that, the value of bonds was increasing, the desirability of precious metals to hedge the currency was depreciating. For 40 years, the trend in fiat currencies and bonds was higher, and the trend in physical metals was lower. They didn't need to manipulate the price of gold lower. It was doing it all by itself. Now, what I think you'll see as the price of precious metals trends for the next 4 or 5 years inexorably higher, the manipulation that you will see is in the other direction. Now, this is going to get me a lot of hate mail on your site, but that's okay. I'm an old guy, pretty bulletproof. I don't want to get deep in the words. In my heart of hearts, and I hope you don't use this as a headline or clickbait, in my heart of hearts, it wouldn't surprise me at all to see low triple-digit silver prices. I don't consider my prejudice to be an investment fundamental, which is to say, I don't have the confidence that Eric Sprott does to make the simple declarative statement that your viewers like so much. Eric is a speculator, and I'm a loan shark. We have very, very, very different outlooks on life. I believe that the value, the purchasing power of the dollar goes down, and that assets denominated in value in dollars goes up. I believe, too, that instruments that are viewed by people as stores of value will become more valuable and highly coveted. We've discussed on your show before, Jake, the fact that the market share of precious metals and precious metals related assets in the United States is less than 0.5%.